Hi there, this is Larry Edelson with my Uncommon Wisdom video update for Monday, October 31st. Well, certainly over the past 2 weeks, we've seen a considerable amount of volatility in the markets and in the emotions surrounding the debt crisis that's occurring in Europe. And just this past week, we did see European leaders come to an agreement finally, of some sorts to help bail out Greece and to defend the sickly economies and debt-ridden economies of Italy and Spain as well. We saw incredible rallies as a result of that meeting in virtually all markets, from gold to the Dow to the S&P 500 to all commodity markets. But I am going to tell you right now that the rallies you saw based upon the European debt crisis attempt to resolve their situation are, in my opinion, false, overly optimistic rallies, and they will give way again to the moves lower that I have been expecting in virtually all markets across the board. Now, I want to go to the charts immediately to show you some of what I'm seeing in here. And although we've gotten a little bit beaten up on my views and my recommendations this past week, I am fully confident that these markets will be heading back down again later, probably in the days ahead, for the primary reason that the technicals and cyclicals support it, but also because this agreement in Europe lacks any details. It's nice to agree that they're going to come up with $1.4 trillion in bailout money for Greece, for Italy, and for Spain, but they have no way of coming up with that money. And the European Central Bank, unlike our Federal Reserve, is not big on printing money. So we have one big giant hole there. Where are they going to get the money? Also, the alleviation of some of Greece's debts and agreeing to a 50% write-down on Greece's debt situation is fine and dandy. However, it's not enough. Some studies I reviewed indicate that Greece, even after a 50% reduction in its debt levels, is still patently unable to pay back debts even at 50 cents on the dollar. So in the weeks ahead, don't be surprised if you see the agreement that Europe just came up with completely fall apart. That would be the fundamental underpinnings to a move back down in the markets, along with, of course, the ongoing sluggishness in the US and European economies as well. Now, quickly to the charts. Let's take a look here at gold. Gold is on your screen now. You can see here the rather sharp rally during the days up to and immediately after the European debt crisis. It does look like gold has bottomed here. However, my system models, which I cannot show you on this screen simply because they're on another computer, indicate to me that we have reached a near maximum retracement off of this big leg down here, and that very soon we will see gold turn back down immediately and at least head towards this support line here that I'm clicking on for you, down to the 1620 level, and then eventually work its way lower, where I do believe that the September low of 1535 in gold will be taken out with a test of $1,500 and lower down to 1480, perhaps even lower. Little too early to say, but I have complete confidence that the rally that we just saw is probably topping out either here or just a tad higher. Now I want to move on to the silver chart. Silver is actually considerably more bearish than gold, as it's been over the past couple of months. We've seen the first initial crash from the $50 high, which was a considerable crash. Then we saw a choppy corrective rally occur through June into September, and then another collapse down to the $26 level that occurred in September. And now again, we are seeing a meager attempt at a corrective rally in here that is also running into very significant resistance at 36 and 38. Silver could still bounce a little bit higher to as high as 38 because it's such a volatile market. However, I believe that we are soon going to embark on another leg down in silver that will hit my targets of $25 and then $23 and perhaps even lower. Keep in mind that, this market, all markets are going to be very, very volatile, so you don't want to be beholden to every rumor and whim that occurs in the news media, nor every gyration that occurs in the markets and in the charts. You want to keep the intermediate term point of view in focus, and that's what these updates are here for you and why I do them. Let's now go on to the dollar index. In my previous video update, here's the dollar index. I did indicate to you that back in September we'd see a rally up to about the 80 level in the dollar index, and indeed here is what we saw. We then saw the dollar index and the US dollar start to depreciate again against the euro and against most other currencies, even as the euro crisis was taking its toll on the euro. And indeed, the dollar has now fallen down to critical support for this recent rally down here at the 75 level. The dollar must hold in here, or it's going to drift lower to the 73 level, which is absolute strict support. If that level down here by this red line is broken at any time, that means the next leg of the dollar's bear market is here. And recall that the dollar is in a long-term bear market. I do believe, however, the dollar is going to start stabilizing here, and we're going to start seeing the euro fall apart again as a result of the lack of details in the European sovereign debt plan, and we'll get a rally back up perhaps to the 80 level in the dollar index, which of course would be synonymous with the wave down I'm expecting in commodities now that this rally has come and nearly passed, or we're within a day or two of passing. Let's now look at the Dow Industrials. Significant volatility here, as we all know. We've been seeing this market whip around like crazy. And the rally that occurred after the European leaders agreed to some kind of sovereign debt measures was ferocious, getting us back up to the major resistance level of 12,250 up to 12,005. Here, too, as sharp as this rally from the 10,400 level has been over the last couple of months, and despite the fact that September has proven to be the largest up month for the Dow Industrial since, I believe, January of 1987, this market has not turned back into a long-term bull market yet. It will do that, but the time is not here yet. That time is going to be around 2013, 14, and 15. Right now, I believe the Dow has shot its load off of the European optimism about the sovereign debt crisis, and it too will turn lower again and trade eventually, probably before year end, down to new lows below the 10,400 low, possibly as low as down 9,000 even before year end. So there you have it. Please stay tuned to all of my publications, my Monday written columns that alternate each Monday, and these videos each Monday, and any special alerts or flash alerts I may be sending out if you're a subscriber to my Real Wealth Report or my resource Windfall Trader. Have a good day. I'll talk to you soon. This is Larry.